But in particular, what really surprised me was the actions of the BIS, the Bank of International Settlements, and the way that they, in essence, pulled what I would classify as espionage, pulled a move right out of a James Bond movie. Now, we've talked a lot about Enbridge and the BRICS, and that's been a central thesis of mine for quite some time. So let me explain. It's very interesting because during the meeting in St. Petersburg, I believe it wasn't St. Petersburg, Kazan. It was Novigrad, pardon me. Novigrad prior to Kazan. Novigrad was a meeting that was coinciding with the G7 meeting in Italy. And what came out of that meeting was that the former president of Brazil, Dilma Rousseff, the head of the BRICS New Development Bank, came out and said, we have agreed in principle to a new settlement currency called the unit. It will be 40% gold backed. It will be traded over Project Enbridge. And in principle, we have agreed to it. Now, this was setting the stage for the meeting in Kazan. And Project Enbridge was the vehicle. Project Enbridge, we've talked about for going on 2 years now, a cross-border payment program that was designed and invented and developed by China, Hong Kong, primarily Chinese software, Chinese development, Chinese technology, along with Thailand and the United Arab Emirates. It was an encouraging sign for those who are following the BRICS to see Saudi Arabia join as a fifth full participant prior to the meeting in Kazan. And so you had these 5 players, the original 4, all of it being administered by or helped along with by the Bank of International Settlements Innovation Hub. Now, I was giving an interview, and I always thought about that. It kind of just went right over my head. I would think about it, and well, after all, the BIS reclassified gold as the world's only other Tier 1 reserve asset. So maybe the BIS is in this for other reasons. And I was doing an interview with Michelle McCory, who always asks very challenging questions. And she says, but Andy, isn't the BIS a Western institution? And I'm thinking, ding, 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 ding. Yeah, why didn't I really focus on this for a moment? We were going back and forth over plausible explanations of what this could mean. And maybe the BIS wanted just to run be on top of a digital platform instead of having a one world currency. They could have a one world system where they are controlling not only any aspirations that the US have through Project Agora or Project Cedar, the Federal Reserve would have on a digital payment system, but also being involved in the BRICS system through Enbridge. And so they had their fingers in all of the pies, and you see all of the central banks accumulated, including those in Europe. And when they saw what happened to the Bundesbank, give us back our gold, well, it only takes 5, 6, 7 years to get it back. I think the lack of trust in our traditional instruments like treasury instruments and the possibility of going back to a system, as Zoltan Pozsar says, Bretton Woods 3, a system that will be about transparency a la blockchain and commodities a la gold. Just like Dilma Rousseff told us, the unit would be gold backed, 40% traded on Enbridge and would be deliverable upon demand. Well, it just makes sense that the central banks understand this. Look, you could talk about the rise of cryptocurrencies and Bitcoin, and that could be a strategic asset. Sure, but it ain't going to back a currency system. It has too much volatility. Gold, on the other hand, would be the perfect backing. Even Kristalina Georgieva, the head of the IMF, said a central bank digital currency not pegged to something is fiat. Well, what else are they going to peg it to but what the BIS said is the only other Tier 1 asset? And you go back to the beginning of 23, the report that came out of the IMF saying gold as an international reserve currency, a barbarous relic, no more, question mark. You put all of the things together, even look at the European central banks in your neck of the woods, all of them have been accumulating gold, and look at the way that the gold relation to their GDP is level across the entire European Union. It's if they're all preparing for some form of a gold revaluation, some form of a new system tied to gold. So these countries, it would be in their best interest to not say, this is how much we have. And I find it, there's a fine line between conspiracy and reality, Kai. And you look at this new supposed but unverified massive biggest gold discovery ever found ever in China. Well, what better way for them in a year or two when this were to happen to say, Yes, we've told you this is all we have, but this gold find, we were able to extract so much gold that, and you mentioned Alistair McLeod. 2 years ago, Alistair said the Chinese had 38,000 metric tons in his estimation, 20 by the state and 18 by the people. What better way to say, actually we have 45,000 metric tons, not the 26 that we told you, because this gold find, well, God, it was huge. Well, how would we know? How would anyone know? My point to you is simply this. Do not trust what they're saying as it relates to gold, because we're playing the same game. No one knows how much gold we have, if we even have it any longer. And if indeed we are moving to a system that is tied to the stability of gold, as Judy Shelton says, is the only way to reestablish trust. Now, hers is not quite the gold standard as it once was, the classic gold standard, but tying a 50-year treasury to gold, which would be the first pathway to reestablishing trust with the United States monetary policy. Same thing is true with global monetary policy. And if that's where they think it's all going, it doesn't do them any good, not only to tell everyone how much gold they have, but to keep their mouth shut in terms of how much through proxy banks and sovereign wealth funds that they are draining from the COMEX and from the LBMA, using the stupidity of the Western banks that continue to suppress the price. And look at the drawdown in supply. We're just playing right into the hands of these countries. So it doesn't do any good to say how much they're accumulating or how much they have if the ultimate goal is to reintroduce this asset into the backing of a new monetary system. And I think ultimately that is where it will go to some degree. And maybe what the BIS did put a little bit of a damper. But remember, this is Chinese technology. They're going to continue to move forward with this, and they're going to settle in local currencies, and they are going to offset any difference on a net basis with gold until they get a new system. I think the whole thing is moving in that direction, and anyone that would hold treasuries that aren't gold backed of any duration right now in a country that has signaled inflation over austerity forever is foolish, especially when it can be weaponized. And that is what led to this whole group of the BRICS and the whole idea of using a gold-backed currency instead of a dollar, which is losing value precipitously every day and can be weaponized against you if we don't agree with what you're doing. I think it's a strategic metal, period, and it's not an industrial metal as they want us to believe. I think the real question, Kai, is why are 8 banks holding the largest concentrated short position in any commodity traded on the COMEX market, about 700 plus million ounces? But 8 commercial banks hold what amounts to the largest concentrated short position in any commodity ever traded on COMEX. And why is there a 4 to 6 billion with a B ounce shortfall on the LBMA in naked shorts, meaning they're shorting the price, trying to drive it down with nothing standing behind it but a big checkbook? And that really, to me, is the biggest question. And I've talked about this at length, where, you know, the military industrial complex has removed silver from the Silver Institute metrics. And here we are 4 years into a structural supply-demand deficit, another 240 or 50 million ounce shortfall again this year, amounting to over 1 billion ounces short in the last 4 to 5 years from supply to demand. And at the same time, why isn't the price rising when India has imported close to 900 million ounces over that same period of time? That's more silver than the entire stockpile is at the LBMA. They say they have 800 million ounces, Kai, of which 500 million purportedly belong to the ETFs. That leaves a 300 million ounce float. The LBMA is trading, by their own admission, 290 million ounces per day, the entire float. But what is interesting is they admit to that number being 10 times understated or more, because they only post the final settlement numbers each day, not all of the trades that it took to get there. So in essence, they're saying, well, we're actually trading upwards ends of 3 billion ounces of silver per day, which is 3.5 times annual global mine supply, 10 times the amount of silver they have backing those contracts. And so those commercial banks that are doing this, that are shorting the price of silver, all of them west, are doing so at a 90 to 95% naked clip, meaning they don't have the silver behind it, just big checkbooks. And this is why you see a 45-degree angle of the silver that was held at the LBMA now is being drained and has been delivered away. The same thing is happening on COMEX, and the same thing is even happening on the Shanghai Metals Exchange. The metals are being drained. Now, I would say they're doing it very strategically. I think there'll be much higher inflation. You know, the inflation numbers came back at an annual rate of about 3.4% recently, and we can debate all day long the CPI. Did I say that? I mean the CPI. From the BS, I mean the BLS. I mean, so the point of it is that the numbers that come out both unemployment and inflation are a complete and total lie. But let's just take that 3.4% at face value. They strive for a 2% inflation rate, and that was one of the questions I asked Judy Schectman. Who the hell came up with that number and why? Because wouldn't zero inflation be a higher standard of living than 2% inflation? In 10 years, that's 20%. You know, my father told me, as a side note, when he graduated college in 1963, that his first job was $6,500 a year, and he and my mother could live comfortably on $6,500 a year. The first Corvette he bought in the mid 70s was $6,000 for a brand new 1973 Stingray Corvette. Now they're $120,000. The point of it is that they're 65% away from where they want to be, their target rate. And they are now pouring gasoline on the fire by lowering the federal funds rate again yesterday by 25 basis points. So they've lowered it by 100 basis points over the last 3 meetings. What's the 10-year Treasury doing? Well, that's going the other way, saying no. We aren't holding anything of any duration if you're going to inflate, because here we are 65% away from their target rate, lowering rates, rekindling inflation. By dropping rates, they're not signaling victory over inflation, they're waving the white flag on inflation. And you talk about potential tariffs, that signals price inflation, no question about it.